Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Justin Schrieber from LifeMD. LifeMD is building the leading platform for comprehensive virtual healthcare or telecare, end-to-end compliance first platform for direct-to-consumer virtual primary care. Early mover advantage and partnership strategy create a deep competitive moat. Affiliated 50-state medical group anchored by full-time providers who provide industry-leading comprehensive virtual care. This is a impact company for sure. And for those that don't have health insurance, this could be a good alternative to consider. A lot of times you don't have to go into the doctor to have someone take care of you. And I'm going to let Justin tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey, everybody, Tim from Alpha Capital coming at you with a follow-up. It seems like I just talked to you a couple weeks ago, Justin.
I think it was less than 2 weeks ago. It's great to be back.
Yeah. So look, you had some impressive numbers. Justin Schrieber from LifeMD had a nice earnings report. I thought you did the call very well.
Thanks.
And I got a lot of people that wanted this follow up badly. So got some questions sent in. We'll go over those in a second. But just overall, how are you feeling about things?
Overall, we feel great. It's great to put out a guide, as we did for 2024, and then, exceed that number, which is always the goal, right? Be conservative with guidance and exceed it. We're really pleased with the performance of the telehealth business last year. Clearly, like the weight management offering, was just a really it had a terrific year. Our RexMD business had a great year as well. Our non-core subsidiary, as we had guided throughout the back half of the year, also returned to circa $1 million a month in EBITDA, and that business is continuing to perform really well, and we expect a great 2025 out of WorkSimpli also.
Right, right. So, and I think you outlined some really exciting things, right? I mean, you outlined some new stuff that's coming on.
Yeah, two big things that I would emphasize from the earnings call.
Yeah,
First of all, big focus at LifeMD on continuing to diversify the business. We talked about this the last time you and I spoke, but we've now gotten the infrastructure, the company, and the technology to a place where we can quickly and easily launch new high quality, chronic care offerings in
yep,
very big markets. The two best examples of those are the behavioral health business that we recently announced. And, we started to talk a little bit on this past earnings call about launching our women's health business as well towards mid-year. Very excited about both of those. I mean, all of these include, and then also the men's hormone therapy business can be very, very big businesses over the next couple of years. I mean, each of them individually can be the size of what our entire telehealth business is today. So super optimistic about that. The other thing we mentioned on the earnings call is the imminent launch of LifeMD Plus. That's our $19 a month membership program, which is going to offer people 24/7 access to amazing care, immediate prescriptions, when they need them for many of the most, common kind of urgent care, immediate prescriptions when people need them for, many of the most like kind of common conditions out there where you need an urgent prescription. Also, we're building a marketplace of healthcare products. So, if you're a member of LifeMD, you're going to be able to access a lot of different supplements and other healthcare products that are very high quality at an incredible price. And the last thing is lab work. Lab work is obviously an extremely important part of healthcare. Right now, the way that people get lab work done and then understand their labs is completely broken. Obviously, if you get your lab work done, you go to a Quest or LabCorp, your doctor writes a prescription. If there's a critical value and you're dying or you're in trouble, you're going to get a call from the doctor. But otherwise, like if something's out of range or you don't understand something, I've experienced this. Most of your followers probably have as well. I mean, you really like the doctors and nurse practitioners just don't have time to follow up with you. So, we're changing that. Patients are going to be able to use their insurance to subsidize all of this, including labs. Beautiful interfaces where you can track your labs over time on LifeMD. You can get, AI is going to, quickly, and instantly explain your results to you, and then you can schedule a follow-up call with a LifeMD wellness coach, nurse practitioner, or medical doctor to understand them and understand like how you can change your lifestyle or other parts of your health to improve your labs over time. So we're really excited about that, right? The name of the game is retention. And, we want to have a platform where people can go on and off of specialty care programs with LifeMD, but always keep that core membership offering that's very affordable and has an amazing value proposition attached to it.
Yep. So I was gonna ask you something because I met with another telehealth company actually that was but they're out of like this, I think, South Korea. Um,
Mhm.
but they were telling me that because of there's just like certain programs out there that can like look at your eyes, the retinas, and just the color of your eyes, all these different things that you can be told that can tell them about your health just from the camera itself. Have you heard about that kind of stuff?
Yes, I have. I mean, there are a number of these platforms out there. They're open source. They use a standard camera, smartphone camera.
Yeah,
And yeah, you can by scanning your face is how a lot of them work. They can diagnose a lot of different things. They can also read your blood pressure. I think one of them got a CE mark approval, which is the European Union's equivalent of the FDA approval for blood pressure through a face scan.
that's
So
unbelievable.
that stuff is really fascinating. We haven't we've looked at some of these things. They're a little bit early. They're not approved yet by the FDA in the United
Right.
States, but there's no question about it. Between the Aura Ring and smartwatches and face scans and some stuff that's probably going to be very small and implantable down the road, your health is going to be always connected to your doctor. And I'm sure AI will play a big role in making clinicians and medical doctors much more efficient, but also most importantly, helping people diagnose disease early.
Right.
Prevention is the key to really kind of moving the needle, right? For most Americans.
Yeah, absolutely. And that's why I think, when I hear that kind of stuff, I mean, I immediately think of you because I mean, if things go that way, they move that way. I don't think you're going to be sitting on your hands. I think you're going to be actively getting involved, right?
I think it's a longer term. It is part of the longer term vision for LifeMD.
Right.
The near term vision, there's just a massive need to help people with many of these chronic conditions, whether it be men's health, women's health, behavioral health, GI health. I mean, there's such a need in so many areas that, we're really focused right now on just connecting as many Americans as we can
Do
with
you have
a
for
great
you
doctor.
for your Life MD Plus, right? Is
Mhm.
that a how do I say, like an affiliate? Is there an affiliate program for like your current members?
An affiliate program. What do you mean by that, Tim?
I don't know. I mean, if they bring five people, some kind of, I don't know, some kind
Oh,
of,
and like a referral program.
yeah, kind of like a referral program, right?
It's a great question. One of the issues with being having an affiliated medical group part of our business is we're regulated by all of these various, state and federal
Right.
agencies that regulate the practice of medicine.
Yep.
There are a lot of laws around, around how physicians can compensate or not compensate a third party for
Right.
referral. And the whole referral thing is, unfortunately, for a healthcare organization like ours,
It doesn't fly,
it
huh?
doesn't work. A lot of people do it. We run our business very conservatively. I've asked our, inside and outside counsel whether we could do this in a lot of different ways. And, I think it's, by the way, I think it's sadly, like, I think it would be a very good thing for our members
Absolutely.
and for people that are being referred. But because of the current, laws out there that govern medical practices, we're not allowed to pay referral fees.
Well, I guess anybody that's watching is a shareholder, right? Just look at it like this: it is you will get paid somehow, some way, right? If you continue to bring new people to LifeMD as clients, eventually that will reflect in the share price of the stock. That's
Exactly. I mean,
right.
a lot of our revenue, Tim, does come from referrals. So that's a very big part of our business. It's a very important part of our business is creating such a great experience for our patients that they do refer their friends and family, but we just can't compensate them for doing it.
Right, I got you. At least not now. Maybe Robert Kennedy could do something about that. We'll see.
Yeah, you never know.
Because I don't see it being a bad thing, right? I mean, I understand where maybe I mean, come on, these doctors, how many kickbacks do they take for writing prescriptions? I mean, come on, there's so much stuff that goes on. You're gonna give somebody a hard time because they referred five patients to the thing, and you can't do anything for them. That's stupid. That's just stupid.
I'll just say, Tim, that there are a lot of amazing companies out there that have built incredible businesses where there's an awesome value proposition and they haven't had to pay referral fees to do it. So
Yeah, I know. I
I,
understand.
I think we're going to be just fine without the referral fees. I wish we could use that acquisition method a little bit more, but it is what it is. I don't
It
think it's
is
going to materially affect the business.
okay. All right. Let's see. What else? What else did we have for questions? I want to hit some of the questions that were sent in, uh, because there were some that took the time to write them up, and I actually thought they were fairly decent questions too. So let me see if I can find those. You don't happen to have them in front of you, do you?
I've got a few that you forwarded to me here.
Oh, here we go. I got them. All right. Yes. So you want to just take them straight shot down?
Yeah, go ahead. I mean, you want to read them or would you like me to read them?
I'll read them. I'll read them. Let's see. Thanks for the good work videos. Dutch Schreiber is really good, helpful. What are the top 3 to 4 strategies that you will allow LifeMD to reach, or no, let's see. What are the top 3 to 4 strategies that will allow LifeMD to reach 1 million or more subscribers on its platform? And what is the rough time frame for that?
That's a great question, Tim. So let me say what I can about that. One, I'm very confident that LifeMD will have millions of subscribers, at some point over the next 3 to 5 years. I know we're going to get there, right?
Right,
Uh, I think, look, I think the biggest thing is diversification, which again, we always highlight, and I think we're now at a point, like I said earlier, where we can start to launch a number of other care verticals and scale those. So I think that's a really important part of it. I think insurance is going to be a big part of that as well. A lot of Americans, whether they have private insurance or government insurance, even though it doesn't change the cost that much for a virtual visit, people are conditioned to use their insurance. They want to use their insurance. So, I think as we launch Medicare in April, and expand our private payer programs to all 50 states this year, which we're in the process of doing. We mentioned on the call that we expect to have at least 150 million lives under coverage by the end of the year. That's a conservative number. I think that is going to be a very big growth driver for the business. I think our LifeMD Plus offering, which is a lower cost membership program that is also going to allow people to use their insurance to subsidize, all of the various things you can purchase once you're a member of LifeMD Plus.
Yeah.
I think that makes a lot of what we're doing a lot more accessible. And I think that if you're thinking about patient numbers, right? If you're concerned about us getting to a million or a couple million, active subscribers, I think having lower priced membership programs like that is obviously a great way to drive that number. And then I'd also say, like, I think you're going to see consolidation in this industry. I think LifeMD is in a position to be a consolidator at the right time. And I think that through some strategic and intelligent M&A, that you could also see LifeMD grow very fast.
I think all of those things make really good sense. I mean, I want to emphasize that uh, I prefer when you are. I mean, look, the economy right now is a little iffy, right? I mean, there's a lot of geopolitical stuff going on. People are freaking out about certain things. I would much rather have you err on the side of caution than have you be someone that is over promising and under delivering. So, I mean, there was a question I think that was I didn't put it on this list, but basically talking about the fact that they didn't feel as though the outlook for 25 that you may have presented was as robust as they would have wished, right?
Yeah.
Uh, that in my head is a very smart and strategic move, right? I mean, if you are feeling good about the business, the last thing I want you to do is come out and be like, hey, we're gonna hit hyper growth in like we're gonna hit warp speed and then not hit it, right? Because what happens? You lose all credibility. So to me, it's much more important to be positive and but maybe temper it because you just don't know what is going to happen, right? Does that make sense?
Yeah, it makes complete sense. I mean, we got it very conservatively for our non-core subsidiary Work Simply. On the Tellel side, we guided to somewhere between 29 and 33 or 34% annual growth. Obviously, we want to put a guide out there that's conservative, that we're extremely confident in, and of course, we expect to do better than what we guide as well. So,
Right. All right. So second part of this question was what are the biggest risks that could slow down LifeMD's path, and how do you plan to mitigate them?
I think the biggest risk out there is really just a change in the acquisition environment. And the key to mitigating that risk is, again, not to sound like a broken record here, but diversification. So the more business lines that we have, the more that the less we're affected if one of our businesses, like, the weight management and GLP-1 offering or the ED offering, for instance, is affected by whether it's a softening consumer or more competition. There are a host of different things that could affect any one of our businesses negatively. Generally, I think, look, we've built a very stable business. We've been operating this business now for a long time. It's pretty predictable. But I think generally, look, I think the consumer is certainly something that we think about. And but at the same time, many of the things that we offer are very affordable, and they're things that people generally spend money on even in a recession. So I think that's a limited risk. I don't really There are always other risks in the business. I think if you think about our on the weight management side of the business, there's obviously a little bit to a lot of uncertainty right now as to, when the compounded side of that business is going to go away. And I think, look, I don't, we know that's not going to happen overnight, but we certainly see the writing on the wall that 6, 12, 18 months from now, the compounding, a lot fewer Americans are going to be accessing a GLP-1 medication, most likely through a compounding pharmacy. So that's an area that we're very, very focused on. We announced a deal with a partnership with Lilly Direct several weeks ago that we're really excited about. I think there's a decent chance that we do something similar as well in the future with Novo Nordisk, who makes Wegovy and Ozempic. Um, we have therapies in our portfolio that are not a GLP-1. They're oral generic drugs that are very efficacious for people that want to lose weight. So that's an option. So and then most importantly, we're very good at helping people use their insurance to get coverage for drugs like Zepbound and Wegovy because they have a BMI that's over 30 and they're obese. So there's a little bit of risk there. We feel like we're in a really, really good spot to continue to grow and build this business. Again, because even within the weight management vertical, we think the business is very diversified.
Right. No, I mean everything you say makes sense, right? I mean the more areas you get into, the stickier the business becomes, right? I mean, so
I don't know about the stickier. I just think that, it's no different than an investment portfolio, right?
right,
Even though you're highly confident in everything you buy in your portfolio, there's always going to be risks out there that you can't foresee.
right,
And when you're diversified and you have 4 or 5 or 10 good investments, if one if something, if there's a black swan event, right, with one of
yep.
them, it's a total loser, right? It's no different, right? We look at it the same
It's
way. I
never
mean,
happened to me ever.
yeah, me neither, Tim. Me neither. Those are the ones you learn from.
Those are the ones we learned
The
from,
ones you
right?
learn from. But look, from day one, we've always looked at this business through an investor lens first. And, from we we've the whole reason that we built the care platform that we built, which is our virtual primary care platform that has the ability to treat hundreds of different conditions, that's integrated with Quest and LabCorp, that supports in-home labs, that supports a marketplace for healthcare, wellness coaches, nutritionists. Look, we built this for a reason, right? We built it because we knew that ultimately we would need a platform to build something very big here.
Right,
And
right.
other people have tried to do that. It took a lot of capital, it took a lot of energy. And what I think is misunderstood more than anything about the LifeMD story is the value of that platform. It's incredible. It's very unique. I mean, personally, I believe there are less than certainly a handful of companies that have something that can do what our platform does. I think if you tried to build it, it would cost at a minimum hundreds of millions of dollars and take years, and there'd be a lot of execution risk.
Right.
So I think it's very valuable, and no matter what happens, I'm extremely confident that we're going to continue to build this platform for amazing healthcare and, you know, continue to build shareholder value at the same time.
As things become more digital in healthcare, right, and become more AI and all this other stuff. I mean, you're set for that now. You don't have to start preparing for that, right?
No, I mean we're if you think that's the way that healthcare is going to go,
Yeah,
you want to be long. If not LifeMD, you want to be long if you can figure out a way to do it. You want to be long a platform like LifeMD. Many of them are private, right? If you think about the top 5 platforms for virtual healthcare, especially direct to patient virtual healthcare, really the only there's two that are publicly traded. It's LifeMD and Hims. Hims is more focused on the lifestyle side of things, right? I think
Yeah,
LifeMD is, we do have a big component of our business that is, more lifestyle prescription healthcare, but we're very, very focused on, I think a little bit more squarely on the healthcare and primary care side of things. We offer synchronous visits with doctors. Many days we do over 1,000 synchronous visits across the country. Um, you know, we're integrated with Quest and LabCorp. A lot of our offerings incorporate, real lab work in them. It's a different model. The insurance side, right? We're launching Medicare. We're the first direct-to-patient telehealth company, in this category to launch a 50-state Medicare offering. We've talked a lot about what we're doing with private payers. We think it's important for insurance for patients to be able to use their insurance to access our platform and to lower the cost of using our platform. So, I think we're uniquely situated in a very exciting space.
that is the exciting portion of it, right? Because I mean, they're still using fax machines. I think we talked about that before. I mean, my brother was hurt, and I literally every week had to send in faxes. I mean, I would send a fax, and I don't know how long. You
Yeah.
know, it was like there are so many inefficiencies in the healthcare industry, and I do believe that at some point it's going to go more digital, and when it goes more digital, you're positioned extremely well, right?
There's a Bain and Co. report out there that, is would be probably helpful for a lot of your followers to read. Maybe I can send it to you and you can post a link to it. But this was done a couple of years ago, but they estimate the total kind of disruption from primary care moving to a kind of virtual delivery method is in the hundreds of billions of dollars. It's just a
I
it's
can
it's
see it.
going to it's going to be a it's a massive, massive shift
Yeah.
in how healthcare dollars are spent. And so I would I think it's certainly something that your followers that are looking for, big trends and disruption, and especially those that are focused on the healthcare space, like it's something you want to understand. And there's a lot of
Yeah.
work out there. You can learn a lot now from, Googling or, doing some work on ChatGPT or another LLM about just where the opportunity is in the space and how big it is.
All right. Let me get back to these questions here. Uh, only concern regarding profitability is there. Okay, so they're really not. This was actually a really positive comment. They're really happy to be owning the
Yeah.
stock, and the only concern that they have is regards to profitability. That is still elusive despite the huge operating margins. So what do you say to that? Anything?
I, yeah, look, I mean, again, we last year the telehealth business did about $7 million in EBITDA. We conservatively guided that the business would do $20 million in EBITDA in 2025. We're growing the bottom line. Our CFO, Mark, regularly kind of, explains that we believe the longer term 3 to 5 year EBITDA margins can get to, at least the 25% range, maybe higher. So we're really confident in this. The key to just continuing to driving EBITDA growth is really retention, right? It's some of
Right.
that diversification and kind of cross-care, opportunities, but it's more than anything, it's just you need to have at least, I think, 10 or 15% of your patient population that sticks around for a long time and is really happy on the platform. And this is a big part of why we're, also looking at launching the LifeMD Plus membership. But, if you continue to acquire new patients at the right unit economics, for those of your followers that might not know this, I think LifeMD is incredible at driving great unit economics on the acquisition side. Typically we see 100% return on our ad spend within the first 4 to 5 months. There were a lot of periods last year where we saw a return on ad spend. We were getting 100% return on ad spend day one for our weight management business. I mean, we're just really, really good on the acquisition side.
Yeah.
There's a big focus internally. There has been for the last year on also driving retention, which is part of the reason why you are seeing the EBITDA tick up over time. We need to keep doing that, right? We need to keep doing that. We need to keep diversifying the business, good retention, more cross-care opportunities. And I'm confident in the long run that we'll continue to drive the bottom line of the business.
Okay. Let's see. I think this is, let's see, if you could ask Justin, plan to rebalance the assets and liabilities.
Yeah, I saw this question. Again, this is more of a CFO question, but I mean, I can certainly address it at a high level. I
Okay.
mean, I think, look, we're an EBITDA focused business. We're obviously we're a growth company. We're focused on generating EBITDA. We do have certainly more assets than liabilities. A big piece of that liability number, which in the K, it looks like it's similar in size or close to what our asset number is. A big part of that is deferred revenue. So I think around $15 million of that number is deferred revenue. What that means is when patients come in and they purchase a 6 or 12 month membership from us, if they did that in the fourth quarter or even the third quarter, we only recognize the portion of that revenue for that quarter, and the rest of it gets deferred and sits on the balance sheet as a liability. So, when you back that out, you've got a, I don't know, call it 15 or 20 million delta between the assets and the liabilities. The bottom line, Tim, is we're not like a bank, right? Where we're going to sit here and just have a lot of assets on hand, or a lot more assets on hand than our liabilities in the event that like things go south and we need them. Our cash position is very strong. And I think we run the business like any other kind of growth oriented company would, that's focused on driving the bottom line.
Right. Okay. So, maybe
Anything else on that, you're welcome to send a comment to my CFO. His email is Mark, MARC @lifemd.com, and he can give you a more specific answer on.
Mark's a good guy, very serious guy, but a good guy.
That's an act, but he's a great CFO. He's very professional. He does a really good job.
Okay. All right. Let's see. What else? What else did you want to highlight from the quarter?
I think look, going back to what we started with, Tim, the business is on track. I mean, we had a great year. We're really excited about 2025. We want to stand up these new businesses. I think the behavioral health stuff is really exciting. I don't think we talked about that last time. We brought on a guy named Julian Cohen, who, if anyone didn't read the press release, they should go back and read it. I mean, he was the CEO of Cigna's Behavioral Health. He was the head of Teladoc's Behavioral Health Group at one point. Every company he's ever practically been involved with, he's sold, many of them for hundreds of millions of dollars or a lot more than that. He was the first GM of HIMSS Behavioral Health practice. Great, great guy. I'm excited that like we can recruit these types of people. I think that should send a big message to shareholders. And I think that business is going to be enormous. And so that's really exciting. I expect to, again, do something very similar with somebody, male, female, just like Julian in the women's health market this year. I think if you think about the cross care opportunity there from all of these mostly women that are on our virtual primary care platform that are paying us for a metabolic health program and accessing GLP-1 medications through our platform. It's a great opportunity. It's probably the highest value revenue in the virtual care world, and it's probably also the greatest clinical need. And so we're really excited about that. And then we also talked about the Rex hormone therapy offering continuing to do really well. Um, Look, we're seeing great numbers there in our business. Once we kind of build something that's a $5 or $10 million a year business, like we've done now with that, or let's just say we're kind of getting close to that run rate, we know that we can say with a very high degree of confidence that the business is going to be much, much, much larger than that. So really encouraging there. Again, on the care side, I'm super proud of like the care that we offer. If any of your followers are, think they may have low testosterone or having the symptoms that are associated with that, go get the lab work done. It'll be the best. You will, for 9 out of 10 people that are listening to this podcast or watching this video right now, it will be the best healthcare experience you've ever had. And the goal isn't to put you on testosterone therapy either, right? You're gonna get a you're gonna get lab work done that would cost you $1,000 to $1,500 if you walked into a Quest or LabCorp. You're gonna talk to one of our amazing wellness coaches that's going to explain everything and explain the program. And then you're going to get a 30-minute visit with an incredible doctor that's highly trained in men's health. And look, you might not come out on testosterone or any other medication. You might just learn a lot about your health.
Right.
Um, but it's going to be an amazing experience. And like,
So
I like doing stuff like that, Tim. Like we started, when we were starting, we were helping people access erectile dysfunction medications, which is a big need and helps a lot of men. But I'm just really excited about the quality of care we're offering, with many of these new programs we're doing and how much I think it's going to help people.
so let me ask you, if I because I probably should I'm going to tell you right now, I'm horrible going to the doctor, man. I don't go. I just don't
Yeah.
go unless I got a limb falling off. I'm not going to the doctor. So uh if I wanted to get that lab work done, like you're saying, right, through you guys, so what does that run?
We've been testing and some different price points for it, but
Okay.
it's anywhere from 49 to $149. And that's a cash pay program, but
For a
it's
full lab?
for everything, Tim. And I'm talking not just a full lab. I mean, I'm talking a lab that would cost you $1,000 to $1,500 and that your insurance, even if you have great insurance, wouldn't pay for. And that includes the initial visit with a doctor that I promise you would walk away from that visit learning something really helpful
I'm going to do this, man.
regarding your health.
You just sold me. You just sold me. I'm going to do it for sure. I'm going to do it. I know I need to, right?
Yeah, you
There's no
should.
doubt in
And
my
by the
mind.
way, as we stand up the men's health, the LifeMD Plus program, and as we expand the insurance coverage there, it's a great program. I mean, even through that, you could pay $19 a month. If you ever do need a doctor or something's off, even with family member, like you're there, you're a member, it's super easy. You're going to get a great doctor. But besides that, like you can do an annual wellness visit once a year. And even if you paid cash and didn't use your insurance, it's very, very affordable. It's super convenient. You can get your labs done once a year. You can even do them in home. Like we could send a phlebotomist to your wherever you're working from, Tim, and then once a year you'll see these things over time. You can, try to make some changes to your lifestyle if you want to, or your diet to, make the labs look a little bit better if you care. If you don't, it's fine. But look, that stuff does move the needle, right?
Oh, you're
We're all bad
absolutely
at it.
right.
I'm bad at it. It's probably been 18 months since I've had lab work done.
Yeah, no, you know what, man? I can't tell you. I can't tell you the last time I had lab work done. It's really, I just don't go to the doctor
Yeah.
for anything. I mean, unless I'm dying, that's
Yeah.
I'm not going. So, um, but I'm going to do it, man. I mean, I did not realize it was that cheap.
Do it. And
So how does it? I mean, how does it work? They send me out how do they do I mean, is there a way I can do it I don't have to have somebody come to the house? I just send my blood in.
so we are working on some in-home options. The problem with some of the in-home options is you can't collect enough blood in one of these in-home collection devices to
Okay.
run the full, lab
Full
test
lab. Okay.
that, we think is appropriate, or not we, but that our providers think is necessary, if you think you have low testosterone and are considering going on a testosterone therapy. We do have a great in-home lab program for things like metabolic health to check your, we can check.
I want to get the whole.
If
So
you
what
want
do
the
I?
whole thing, if you
Yeah.
want the whole thing, Tim, like we'll find a Quest or a LabCorp. Our team will find a Quest or LabCorp close to you. We'll give you a piece of paper. Everything's paid for. You can show up there or make an appointment, but you literally can show up. There's probably one within 5 or 10 minutes of you,
Yeah.
and it takes 5 minutes.
Okay. All right. Cool. I didn't mean to make this a commercial, but I'm
I'm,
gonna
I'm
do it.
happy. That's great. I mean, no
I'm gonna do it. I need.
problem.
All right. Was well. What? Oh, I want to touch on one thing that was brought up, and I
Sure.
had been asked why I don't ask this, and you know, you have a what's called a what is it, a 10-5
Oh,
and 5
10b51 plan.
yeah
10b,
10
yeah,
yeah
I saw some of these in the comments.
right
Yeah,
10b5 1.
I'd love to give my perspective on this. Historically, but like by training, I'm a public venture investor, right? Like nothing, when you're starting a company, it's a venture stage company. I'm on the same page as all of your followers. Nothing makes you more upset or question your investment thesis more than seeing insiders selling stock, right? Nothing makes you more like, wow, you just never feel good, right? And the CEOs out there that are just constantly, I'll use the casual term, banging out stock, right? I don't know that I've ever been long one of those companies. I do think that my situation and even some other members of my management team situation is it's a little bit different, right? One, we've all been buyers. I got involved in this company in 2016. I took over as CEO in 2018. We've never sold a share throughout that entire process, right? I mean, you can go back and look at the Form 4s. It's been nothing but buying. We've gotten to a point where, it's been involved in this for a long time. I had also had some restricted shares that were given to me for performance over the last year or two, where I had a significant tax liability on those. That was the main catalyst for me filing a 10b5-1 plan, was to cover the tax liability on shares. When you're given shares as compensation or for a bonus, they get treated the same as stock. And a
Right.
lot of times, I don't know, maybe some of your followers don't know this, but a lot of times when you get RSUs, stock prices, it can be high, right? As everybody knows how volatile our stock price is. So some members of my management team were given RSUs at $10, and then the stock goes to 5, right? 6 months later, when they have a tax liability, it doesn't matter that the stock went down. Those executives still have a tax liability based on the value of the stock the day they were given it. And so that was the number one reason for me to file a 10b5-1 plan. It was a small percentage of my overall holdings. There's an above market limit order, so no one's selling stock at $4 or $5 a share.
So everybody understands the 10-5B. The reason why it even exists is because throughout the year, I mean, if you're working on an acquisition or you're looking at some material event, you have a restriction. You can't sell shares, right?
Mhm.
It's called blackout period, which is something else retail investors are unaware of. It's not like you can just go sell off shares whenever you want, right?
That's correct. I mean, you actually file, like, so my plan was filed 6 months before the first share was sold. And you don't know whether the stock is going to be at $20 a share or $4 a share. Obviously, you can put limit orders in those plans so that if the stock is low, you don't sell, but you predefine how many shares you're going to sell and what price range you want to sell those shares when you file the plan. Again, it depends on the bank you're working with. For me, I'm pretty sure it was close to 6 months before, any shares were sold. But I'll also say one more thing. I've encouraged some other members of my C team that have been involved in this company for a long time to file 10b5-1 plans to sell a small percentage of their holdings. I wouldn't want to see people selling massive chunks of their holdings. That wouldn't look good and that wouldn't make me feel great. But the number one thing for me as the leader of this company is retaining the incredible team that we've assembled over the years. I think it's pretty amazing. One thing I've constantly heard from third parties, whether it be board members, other people or outside of the company is, it's amazing that all of these incredible members of our executive team that we've hired over the years, and some of them we've hired, by the way, when the stock's been at $15-20 a share. My CFO joined when the company had an $800 million valuation. When it had 150, he didn't think about leaving. No one did. Even though it was it's like that's a pretty major move
Right.
economically for everybody. And
Yep.
so my number one thing is I want to retain this incredible team that I think has executed for shareholders really well over the last 3 to 5 years. I want to see the same performance over the next 3 to 5 years. I have a lot of confidence in all of them. And I think it's a good thing if look, I think it's a good thing if they sell some shares along the way, buy themselves a nice
Whatever they want to buy.
another house, take a nice vacation, whatever it is. I think it's important. Like people need to be rewarded for their hard work. It doesn't make sense for anybody it doesn't make sense for anybody to just bet everything kind of on this, hold everything until the company's a $5 or $10 billion market cap business, if it gets there. So when you look at the private world, by the way, many of the most prominent venture capitalists out there will, and even like the most successful serial entrepreneurs, I mean, they're always selling. The mentality in the venture world, even among great companies, is like you just you should always be selling some of your position because at the end of the day, like it's the venture world, even
What's it for?
more mature companies, it's like, it's they look at it as reckless to hold it all to the end. I'm extremely bullish in this business, as is all of my C team. I'm
Yeah.
gonna hold most of my stock until the very end. I think it's gonna be really valuable. But again, like selling a little bit along the way, I think is healthy.
Nothing wrong with that. There is nothing wrong with that, right? I mean, and that was my position was when I was asked that question. First of all, it's none of my business why you're selling your stocks. There's a lot of reasons why people sell stock, right? Um, you could have two kids going to college. I mean, there's just all kinds of stuff. It's none of my business, and you deserve for all the hard work for what you've created to be able to sell some shares whenever you feel like it. Right now, if you were selling 90% of your position, I'd be a little freaked out. That
Yeah.
isn't what we're talking about here,
Yeah.
right? We're talking about a very, very small percentage of your holdings. So nothing that is an earth shattering or alarming. I understand what the thought behind it is. Hey, if you think it's so undervalued right now, well, then why would you sell any? Well, I understand why that's brought up, but that's the whole point of that plan is that you don't know what the share price is going to be, but you have some that are going to be sold ahead of time. So that's that. That answers that question. Anything else, man?
I don't think so. Look, I'm really appreciative of all your followers. I love how interactive they are, and we'll keep doing these things as long as people have questions that are good. I think it's a great way for us to. No, it's a great way to, get the answers to many of these questions that investors
What do you
have.
think? What do you think the issue with Wall Street is? Because you're not comparatively. I mean, to the other guys, you're not even. The comps are not the same. Where do you think the problem lies?
Well, I think it's two things. One, I think that markets have been really difficult the last couple weeks, 30 days, as everybody knows. I mean, it's just become a really difficult market again for all small cap stocks.
Yep.
So I think that's part of it, and I think there's still some overhang out there around the whole compounded GLP-1 issue. You know, we have a big chunk of our business that, you know, even though we don't make, you know, we're not making compounded GLP-1s, you know, we don't make any money from compounded GLP-1s outside of like the convenience fees that we charge, you know, for patients to, you know, access them. Um, I think we do have a good chunk of our patient population that, you know, is receiving care from us that's using a GLP-1, a compounded GLP-1 medication. And I think, you know, I think there's a lot of negativity out there around that. I can tell you that I think we're doing everything that we need to do to diversify that business. And I think we're going to be moving to a largely branded, you know, offering over the next couple months and throughout the course of this year. So I'm really confident in that, but I think we need to show that to the street.
Okay.
And if we can do that over the next quarter or two, I think people will look at that revenue very, very differently.
Okay. Okay, man. Justin, I really, I know you're busy as hell. I know this was a busy week for you with earnings and everything. I really want to thank you for taking the time to do this. And
Hey, it's
we'll,
great to be here, Tim. Always a pleasure. Hope you and everybody else that watches this has a great weekend.
all right, hold on one second, man. Thank you for joining us for another CEO interview here at Alpha Wolf Capital today. We had Justin Schrieber from LifeMD. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.